up to your MA, and it starts to bleed, you're going to be in this thing for fucking 2 hours before you get even 20 cents out of it. So that's where you got to kind of be careful with it. So I'd probably pass on that one. All right, cool. All right, this morning, folks. So look, the Nasdaq's kind of in the bounce zone over here now. After really a big pullback, you get 168, 174 out of this bad boy. So it's been a nasty fall, but we're kind of back into the bounce zone. So I'd be just mindful of where your levels are. The market could very well roll over here too. We don't necessarily know. The selling on this was really high. Like if you look at the volume pattern in relative to the bounce, right? The selling was really really intense. And so, we very well may have bounced for a few days and roll back over, or, we could keep going. Historically, the last couple of years, the market, when you get these kind of like 10% corrections, you tend to kind of come back and make highs over time. But this year, like you can see, the trend is different this year than last year, right? Last year, there was almost no big corrections. This year, we've had, a really large correction, not large, but right, really, it felt nasty. A big correction in January, February, and then, even in March, we had a really kind of a dust up. And then here in the first weeks of October, we've also had a dust up. So that's 3 in 1 year, where normally, we're only doing, right, in 2017, we didn't have any. And so that's where the difference lies in the structure of the market this year. But I'd keep an eye on just kind of the levels on the S&P. If you start to clear like these levels over here, so you want to, when you're day trading stocks, in general, if the market is at highs, you don't have to watch the indexes at all. Or if the market is near highs and it's just trending, you don't actually have to sit there and watch the indexes and then time your trades to the indexes. But what happens when the market gets volatility and that VIX goes up and you start to see TVIX and UVXY moving, then what you start having to do is time your day trades to what's happening in the general market. So right now, this is the range that you guys should be paying attention to, that I personally will be paying attention to. If the market kind of climbs out of this 277, good. We'll start playing it more to the upside, maybe to the 9 EMA on the daily chart. If this range doesn't hold, we've got kind of like a little, right, trend line over here, wedgie, whatever you want to call it. If this thing busts lower, then we may go back to those 270 lows here where the support is on the S&P. Then obviously if you break below that, then it gets even nastier, right? So that's just going to be something to really keep mind of in terms of how you're looking at the angles on this bad boy. A couple gappers and stuff today I think that are looking pretty good. CGC, which has really been coiling in a compression breakout for quite some time, right? You've got kind of 2 months of solid, hey TNA, what's up? You got 2 months of solid consolidation, but what's happening now is the range is starting to compress. You're starting to see, right? The wide range is starting to get tighter and tighter and tighter, and you can really see this 50 has been kind of like a little bit of a lid on the stock for a while. You're already kind of coming out of the range a little bit pre-market, but now fading back. But I'd really keep an eye on this. You're going to start to see as this range compresses more and more that it'll have to break in one direction or other, and then that's going to give us some clarity in terms of which way the pot stocks are going. But, overall, the daily charts on these look really nice. Like, chill rate, if you kind of take out the, I'll move the logarithmic chart for a second. Sometimes, when you're trading, you might want to switch from log to from arithmetic to log if it had a really big push, so you can kind of see in a clear picture like what the levels are. So you can see like you got this big kind of, right, it's almost turning into a flag. The problem is it's going to be it's a sloppy flag right now because it went from 300 down to 100. It's a little bit of a sloppy flag, but it's starting to peak out. So what you want to start to see is, right, as you start to see higher lows within the range start to come in, and then you start to push higher, you'll start to catch kind of a secondary break. We may catch a secondary breakout at some point. So overall, it's looking good. You're starting to play a nice range pre-market already from 149 to 159. So $10 range pre-market is actually pretty good. We'll keep this. This is the top of the list. CGC, TRY, top of the list for me in terms of gappers. NIO is moving hot this morning. after that news out that the investor that invests in Tesla has also invested in this one, some Scottish guy, right? This thing popped up to about 830, pull back to the 9 EMA. It's starting to really kind of hang out there. And so now you're starting to kind of, build out a pattern out of this way. You're starting to see some really good pre-market action on this. I'm watching this thing for an opening move. I will say this stock trades thick, meaning that it kind of trades a little bit like NVIDIA. It does a lot of volume, so the float or probably outstanding shares on this is really high. And you can see, right, if it's got a $7.4 billion market cap and it's a $7 stock, how many shares have to be out there? Quite a lot, right? And so it just takes more volume to push it, so it grinds a little bit. So like a stock like this, what you want to do is if you try to trade the breakout in it, like say you just see sideways consolidation, and then you're trying to trade the you're trying to buy it on strength, what it ends up doing is it kind of fades back and it just will dump. A stock like this, when it trades thicker, what you want to be doing is hitting it on intraday dips to support, let it pop up, dip down, hold at some level, and then start playing it back to the upside. Don't chase this thing on strength because it's just too thick, right? You wouldn't chase Microsoft on strength, right? We've all learned the lesson doing it on AMD, right? Always works better on dips, and then I think you'll be able to play this one because it just trades thick. It's all right, though. A lot of these Chinese stocks are showing weakness this morning. If you look at, you look at yin. I don't know why whoever named these things yin and yang. It's fucked up, but it's very funny. So the two Chinese ETFs are called yin yang. But if you look at yin, so that's a 3x bull ETF. It's kind of gapping down right now, showing some weakness in Chinese names. So I've added this Bazoon to the short list. Obviously this thing had a breakdown over here, pop to the 9 EMA. This thing very well may roll back down and get down into the 35s. You're starting to see that pre-market weakness. Momo is also, this is a breakdown pullback. So you got a breakdown here, pop into the 200 at the 9 EMA. So that's your dead cat bounce. And now you're starting to gap down. So now you'll be gapping down here. So you essentially get a red candle to hold. And this thing should start to flow back down to the downside. So especially if the market gets weak today and the market fades off, you'll have these two stocks that are gapping down. They're already showing bear flags on the daily charts, and the overall sector of Chinese stocks in general have been dusted, right? So in general, that's going to be a good thing. A lot of these stocks are going to be nasty today. So just kind of keep an eye on these things. AMRN, you can still keep this day trading this. Now that it's bounced off this 9 EMA and it's broken out the highs. This is going to be, long only for a while. It might need a little bit of a breather today, but this has been a really good day trader for us. So, when you have something that is at highs or near highs, essentially what you're saying is, right, this has got high relative strength on it. ABCD, you're right. This thing looks like I think it's a buyout, so, I'm not particularly going to be trading this one. Well, I'm not going to be trading it. You can see when they go flat like this, it's usually buyout. It looks like it's at 1450. So that one is probably no good. At this point, you can trade TNA too. This is the small cap index. You can see the small cap index had a real big rollover here, but it's the most oversold out of the group. At a 6 stochastics, you're talking about an extreme level of oversold. So I'm fully expecting, if the market starts to bounce, this thing has got the most room to the 9 EMA. So when you think about trying to buy something that's stretched or buying something to the downside and going counter trend, what you want to always look is where it's at in relation to the 9 EMA. The more room it has, essentially the more oversold it is, right? So always keep that in the back of your head. The more room you have from price to the 9 EMA, the more stretched and oversold it is, right? And then when you couple that with stochastics, right, we know that anything under 20 stochastics is oversold. At a 6 level, that's called an extreme oversold. So that has the most room. So if you look at the difference between TNA versus, XPXL, there it is. XPXL is the 3X bull for the SPY, right? This one's got X amount of dollars to resistance, right? But this one, TNA is a little bit more stretched. So I do like using ETFs to kind of play around with the market. One thing to kind of keep mind of is that if the market starts to get dusted again, put this TVIX on your watch list, right? If the market starts to roll over, which it very well could happen, even though we're oversold, it doesn't mean that you're going to bounce, right? If it was that easy, it would. There's obviously something in the air of the market that's giving us the market a little bit of the heebie-jeebies, whatever that term might be. And so this thing may come back down. It may happen in a couple days, but, once this thing gets to kind of that 35, 32 range, we may want to start looking at this for, a potential bounce. Anthony, how you doing, man? Yeah, this VTVT could come out of range. It's been trading like shit, though, because see these tails on the stock? When you get tails like that, Anthony, it usually means there's some sellers in there. And so that's going to be a little bit tricky. But overall, it is a flag, but it's a messy flag. So when you think about flag patterns, right, you want the ones that are like really clean and crisp and tight. This thing is really loose right now. Like it's like, the range is loose and you got these big tails on it. And so for me, this one's probably, it's a butterface, that's for sure. Hey, Kent, what's up, baby? Yeah, so I got Nugget on my list too. A couple people been asking about gold. This is essentially what's called a base breakout pattern. A base breakout pattern is when you got something that's fallen at least 50% or more off its highs. So obviously this recent highs in gold was about 30 bucks and it came down to 10. So 50% or more off its highs. Then what happens is if you get a period of like a couple months consolidation where you start to go sideways and even out the buyers and sellers, right, and let them reach equilibrium, then as it kind of comes out of range, you can catch some upside. So I do think you have a gap to fill here on Nugget at 17. So, we should be able to get up there relatively easy. And then there is airspace up to about 22 on this thing overall. So I would keep this on the list. It is liquid. Gold stocks suck to trade, but the gold ETFs in general are okay. So that could be something you could definitely put on. That's the top of my list. ENDP looks slow. This thing never has any range anymore. It looks like it's kind of like a flag, but it's like a makeshift flag, right? It's, it's a flag off something that hasn't trended. So, right, it's really just in consolidation zone. I like stocks that are a little bit more explosive. That's just my, particular cup of tea. This thing is just grinding along, right? Grinder, I mean, this thing's moved. It's trending up, but it's moved $1 in like 12 days. You know what I mean? So we always want to kind of think like, all right, if this is a swing trade, sure, it can move slow. But if it's a day trade, we need these things to move fast. So guys, good luck today. Let's go and do what we got to do. It's Monday, right? It's Manic Monday. So always start your week off good. As you know, if you start off Monday right, usually the rest of the week goes good. You screw up your Monday, the good part is you got the rest of the week to fix it, right? So either way, you win as long as you go out and do the work. So let's go and do what we got to do, my friends.